I think small business is an endurance sport. And if you think about, track and field versus running mid-distance marathons, your whole attitude to training and, the game itself is different. And I think in 0 to 1 startup entrepreneurship, it's a sprint. It's track and field. I've seen so many of my friends get into entrepreneurship, put on a ton of weight, go through a divorce, lose a quality relationship with their children, not be as present with their hobbies and their passions. And it's like, why are we doing this? Like, we work to live. And so how is it so easy for us to get off track on that? And speaking from experience, like, I have to keep myself in check on that from time to time too. And I mean, right. I think there's kind of two muscles that you're building in company building, especially in the small business landscape. And one is like the ability to just get like punched in the face over and over again and still get up, right? Like this resiliency of just, you develop thick skin. You also develop this internal confidence of, while I've never solved this crisis before, I know I've felt this emotion of a crisis like this before, and I know that the sun still came up the next day, and I knew I found a way to get through. And so you build this capacity for pain, or this capacity for like resolving crises and problems.
Welcome to The Intentional Owner. It's me, Kaustubh with Sam Rosati, as always. But we have our first guest today, which is exciting. Given, the people who listen to this are probably have listened to all ETA podcasts because they've kind of moved their way through and they've ended up with our podcast. I'm sure they've listened
Bold
to
assumption,
Chase
but
before.
Continue, Kaustubh.
Yeah, that's my guess. They're at the dregs of ETA podcasts now. So you've probably heard of this guest. His name is Chase Murdock of Decada Group. Hello, Chase.
Hey, morning, guys. Thanks for having me.
So, Chase, give us the 10-second intro, and then we'll dive straight into questions.
10 seconds. All right, I could do that. So I run a group called Decada Group out of Salt Lake City. We have 6 companies. We've done a bunch of acquisitions. We've done a few startup incubations, but we're all geographically focused in Salt Lake. A bunch of businesses in very diversified industries, from electrical contracting to accounting and finance to luxury custom tailoring, which is where I am today. In Chicago, one of our businesses is opening its second location this week. So out in Chicago this morning, helping them out.
And we're going to circle back to that because this is what I was super curious is Decada's always had such a geocentric vision. The fact that you're opening in Chicago, and I know Taylor Cooperative years ago thought about opening in another city as well. So I'm curious to come back to that and ask about.
Yeah, let's come back to it.
But tell us about the background first, right? Our podcast is about being an intentional owner. Name drop the title, and really what it's. See, this is why Sam and I are good co-hosts. Is he laughs at that. Anyways, so the kind of what does it mean to be a business owner, and how do you structure a life in a way you're excited about and really enjoy? You're somebody, you serve on my advisory board of my business. So I've kind of looked up to you in terms of putting all the pieces of your life together, because you've got a lot of irons in the fire at any moment, putting them together in a way that seems sustainable from the outside, at least. But I'd love to hear kind of when you entered this sort of SMB ETA world incubation, what were you thinking in your head in terms of the intention behind Decada?
Yeah, well, all right, I'll try to keep it brief, but I think I had to get it wrong in order to get close to getting it right in terms of my relationship with my businesses and, being an entrepreneur, which, the old joke is you go out on your own in order to not have a boss. And then you find out you have 1,000 bosses across your customer base. And if you have investors, and then you have your team and all of a sudden you're more accountable than you were in a corporate 9-to-5. And that's so true. But my roots were in 0 to 1 kind of venture-backed moonshot pursuits. So my first business was actually a luxury retailer, raising capital, a few $1 million at in my very early 20s, 21, 22, 23, was scaling a company up to 50 employees in 5 markets, and had a board of directors and way too much capital behind this business. And I was trying to act like I had it all together. Trying to, I couldn't even spell work-life balance at that time. There was no even attempt to balance.
Right.
It was the kind of classic thing that you find in venture capital or venture capital backed entrepreneurship, which is you're not in pursuit of something sustainable. The goal isn't to build something durable and sustainable. The goal is to build something that can exit. You kind of make this either conscious or unconscious decision to do something unsustainable in exchange for ideally a great outcome 3 to 7 years down the line, right? Whether it's raising a boatload of capital, working 60-hour weeks, maybe getting divorced in the process, leaving your hobbies and your health on the sidelines in order to go build something that can get acquired, or if you're really lucky, or really successful, go IPO. And then you can go live your life, right? And now that I've looked back on that with some distance, I call it the classic like arrival fallacy of entrepreneurship, right? It's like you're foregoing something today in exchange for some ethereal, nebulous thing tomorrow. And I did that for the first 10, 12 years of my career, a lot of different startups, some worked, some didn't. But every single time, it was vaguely that playbook of let's give something up today, let's work our tails off, let's raise a lot of capital, and hopefully this all pays off at some point.
Mhm.
And kind of to get into the second chapter, I was out on a long hike with my best friend and business partner, Adam Malmborg, who's my 50/50 co-owner in Decada. And this was 10 years ago. We were out on a hike in Capitol Reef National Park, and we were trying to figure out what's next. We were like trying to brainstorm the next moonshot venture. And he was peppering me with questions of my first startup experience, this custom clothier. And just all over me, I'm like, why'd you raise so much capital? And why didn't you just like build a lifestyle business? Like, why didn't you double the prices and run it profitably? Why did you need $3 million in capital? Why did you need 50 people? Why did you get into 5 markets in a few years? And he kind of convinced me to get back into an industry I had sworn I would never touch again. And we decided the only terms by which we'd do that is if we built something beautiful, durable, and not, in pursuit of scale, and not something built on this premise of the arrival fallacy. And so we started Taylor Cooperative 9.5 years ago in downtown Salt Lake City. We started it on $750. And every month was pretty profitable from there in the first 2 years. And we were doing $1 million a year top line 18 months later. And we had this beautiful little teeny lifestyle business that turns out was a blast to build. It was tangible. It was profitable. Turns out that's fun. And, that kind of is what initially opened our eyes to the SMB side of entrepreneurship versus what I kind of call the moonshot side of entrepreneurship.
Chase, did you start that Taylor Cooperative business ahead of Decada? Did you sort of layer Decada over top of that business?
We did. Adam and I sometimes aren't sure when we first uttered the terms holding company. In fact, Kaustubh, do you remember when you and I went out to coffee? You were flying through Salt Lake City, and I remember I think at the time we had acquired our first business or our second company, and we had formed a holding company. And at that point, we had decided on the name Decada Group. I'm sure I'm remembering it wrong, but I'm remembering just asking you Kaustubh, what do smart people like you call what I'm doing? And you're I think it's holding company. I'm sure I'm romanticizing the context.
No, but you're exactly
but,
right that the correct way to do it is to execute first and name it later.
I mean, it's
right.
So
I feel
true. It's so true.
everyone flips that.
I mean, yeah,
have something to hold before you have a holding company.
I'm trying to get to the point where that no longer gets on my nerves, because initially, when a searcher comes up and is yeah, I'm going to go buy my first business, and the goal is to go start a holding company. It's well, let's see if you like and are good at company 1 before we talk about companies 3 through 10. But I mean, it's I get the ambition and I get the appeal of a holding company, but that wasn't what pulled us into the vortex that launched Decada Group. We weren't finance bros looking for the perfect capital allocation vehicle. We just weren't thinking along those lines. We had a great, beautiful small business. And at one point we felt like maybe our playbook was a little bigger than the single company. And we had this serendipitous opportunity to acquire some real estate and a business that kind of came at us instead of us going at that. And that forced me to go kind of out into the woods with the PowerPoint deck and create the premise of what we called ABC Ventures. And I had to pull Adam into a conference room and say hey, I have this idea. And honestly, like it was, I sometimes go back to that deck because it's like laughably naive. It was like a pyramid, and at the base was real estate holdings, and it was, it was just this
Nice.
very, nebulous concept. But at the time, what Adam and I knew was we were having a hell of a time building Taylor Cooperative. We were starting to decentralize a little bit. We were starting to see some maturity in that company, and we wanted to go get into new things, but we weren't sure we wanted to go start up again. And we came into this space of ETA and this idea of acquiring an already established company.
Can I ask, Costa, before we go too far down the road into the second business and Decada? We always talk a lot about the why, a lot about solving problems, sort of in being intentional about our lives and building work around that, even though I think Kaustubh and I have in many ways done the opposite in our careers. So do as we say and not as we do. But tell me, why Salt Lake? Why with a partner? And why a clothier?
Yeah. Well, so, I mean, first and foremost, I think what Adam and I really stacked hands on early on in our journey was, what does it look like if we get off the arrival fallacy treadmill? And I remember early on, we were talking a lot about how our North Star was going to be building a day-to-day we don't want to retire from, where it was like, what does it look like if we flip the idea of like a moonshot venture, a venture-backed startup experience, which, by the way, was like our craft, our love. Like, I love company building. I love entrepreneurship. And I kind of always assumed that the only way to do it was to work your tail off for 60 hours a week, work hard, build sweat equity. And then maybe if you're successful, you could start to dial that down. And I don't think we talked about it as explicitly as I'm making it sound right now, but I know that like early on, we were adamant of like, what does it look like if we don't do that? And to us, naively at the time, we were like, well, what if we just start a small business? Like, that sounds easy, right? And of course, like, small business ownership is anything but easy. And a lot of folks like myself 10 years ago come from tech, looking almost down their nose on a plumbing company, saying like, oh, how hard could it be? You just come out and turn a wrench. And then
Add some
you
marketing.
learn, just sprinkling some marketing and an iPad, and ooh, we're off into the races. And so I think we had a little bit of that ignorance as well. But to come back to what you asked, Sam, like, why Salt Lake City? I think, Salt Lake City's home for me and Adam. And Adam and I have been best friends for about 15 years now. And when you think about like a day-to-day you don't want to retire from and building something intentionally, to use the word, it's kind of like not necessary to go build in a top market. If the goal isn't to maximize return on invested capital, and the goal is something else that's a little more ethereal, it allows you to be more focused on your backyard and your community. And so, why with a partner? It's been incredibly fulfilling, and he rounds me out, and I round him out, and it's fun to build with someone, and it's fun to build together. And why a custom clothier? I don't know. Like, we aren't the most passionate about custom tailoring. Like, we are, and I've grown to love this space across 2 businesses in 15 years, and put some Italian fabric in front of me, and I'll have a heyday. But it's definitely not what I wanted to build my career around initially. It wasn't like we were product people passionate about this product. It was more, we are company builders who love everything that comes with company building. Let's go find a phenomenal industry and business, and we can talk about why I would call this business like phenomenal, because it like checks a lot of boxes that a lot of searchers don't look for, like retail, et cetera, et cetera. But I think if we didn't start Taylor Cooperative, we would have started something else. And building kind of bloom where you're planted is the cliche saying. It's like the eat, pray, love of staying local. That really resonated with us. It was like we're in a city that is changing and on the rise. Salt Lake City, we hosted the 2002 Olympics. We're going to host the 2034 Olympics again. It's a fast-growing city. The mayor of Salt Lake is a customer of 3 of our businesses. Adam and I kind of care about the city. We care about what's coming next in the city. We get involved in nonprofits and causes in the city. And so there's something really viscerally fulfilling about building intentionally in Salt Lake. And again, I don't think we were this articulate or this like intentional or deliberate about this strategy at the time, but yeah, I think there's no coincidence that we ended up building what we're building today because of those things that we were passionate about back then.
I am curious, Chase, the arrival fallacy, right? Like that feels like the core underpinning point here. And I remember you and I had a conversation over dinner a couple of years ago when I came out to Salt Lake City about arrival fallacy, because I was definitely at a point in my business where I was like, this is tough. Like I'm struggling
Yeah,
to
I
figure out
remember
what
that.
to do with
Yeah,
this.
you were in the gutter,
Um,
man.
I was in the gutter exactly, and the way because I think what I had thought was I was also doing the same thing. I thought I was like avoiding the arrival fallacy because I had said like, hey, I want to build this business to be something sustainable for me, and something that I enjoy doing. And I think the kind of the reframe you gave me in that moment was like, hey, that's actually also an arrival fallacy, right? That you're trying to sprint and grind to get the business to a certain spot where you can then be sustainable. Like that's actually not it either. Like you need to aim for sustainability right now.
Right,
Um,
right. Yeah, I mean, I think small business, particularly when you don't raise capital, but not necessarily. I think small
yeah.
business is an endurance sport. And if you think about, track and field versus running mid-distance marathons, your whole attitude to training and, the game itself is different. And I think in 0 to 1 startup entrepreneurship, it's a sprint. It's track and field. It's 3 to 5 years. If you're unlucky, it's 5 to 7 years. But do what it takes to dovetail it and just sacrifice. And I think like the most successful business owners I know in Salt Lake City and beyond who have built, they've built it over decades. It's like they found a way to enjoy the craft. They found a way to last decades. I love the word durable, and it's all about durability. It's about how do you build something sustainable and durable, where maybe it's not at the highs and the lows aren't as pronounced, but you're constantly moving slow and up and to the right. And so, at the same time, though, there's sacrifice is necessary to create anything good, right? And so, yes, you were like a little bit in the arrival fallacy headspace back a few years ago, maybe, but I think you were also in the like inevitable J curve of post acquisition. Like things take sacrifice, and I'm definitely not someone who's just like, well, if it's not easy, move on to the next thing. Like if it takes sacrifice, it's not worth doing. That's not my attitude, but I think it's being intentional, to use the term again, about am I trading something in the short term for something in the long term? And if so, let's be conscious about what that trade is, because I've seen so many of my friends get into entrepreneurship, put on a ton of weight, go through a divorce, lose a quality relationship with their children, not be as present with their hobbies and their passions. And it's like, why are we doing this? Like we work to live. And so how is it so easy for us to get off track on that? And speaking from experience, like I have to keep myself in check on that from time to time too. And Adam does the same. And so it's easy to slip into. But I think that concept of arrival fallacy gives a framework to help you kind of think it through.
Chase, could I ask you a little bit about your partnership with Adam? Because one thing that Kaustubh and I haven't spoken about are the pros and cons of having I don't know if you want to call it an equal partnership in the ownership sense, but like an equal partnership in the responsibility sense, and in the, the mental toll and in the work-life lack of balance potentially.
Yeah.
Did you ever work with Adam? I didn't catch that part before you guys
Actually,
started.
no, we didn't. Yeah, no, we were friends before we opened Taylor Cooperative together.
So then why did you do it together? Was it merely like hey, we are compatriots, let's cannonball in together, we'll figure it out? Or did you have more intentionality behind that decision?
Yeah, it wasn't terribly intentional. I had, though, prior to done 4 or 5 different startups, some where I was a solo founder, most where I had other co-founders. Had some where it was a co-founding team of 4, had one where it was a co-founding team of 2, and also went in with a friend and ended up having 2 with our board, let him go due to like embezzlement of the company. Like I've had bad partnerships. I've had great partnerships. And, there's no silver bullet when it comes to this topic. I think that the best partnerships that I am pro partnership in general. Obviously, you give up a lot of the economics. And if you're sitting in a spreadsheet and you're thinking about value creation and you're thinking about again, the economics of it gets really hard on paper to justify having partners because you're truly giving up half of everything. But for those of us that have been in the trenches for a while, yourselves included, I think like it can be very lonely and it can be a significant emotional toll when you do not have a partner. And again, coming back to this arrival fallacy, sorry to make this like the theme of the first part of this conversation, but if the goal is to have fun building and if the goal is to, have a Tuesday morning that is kind of like the ideal Tuesday morning, every week of the year, like I'm not doing it for an economic, like, yes, the money needs to make sense and I need to be moving economically up and to the right and that the financial motive needs to be enticing, but I have a lot more fun building with someone. And at the time we weren't at a scale where we had a management team or teams of people where sometimes you can get that from your experience, but when you're starting out, it's just you and a bud, right? And so that was fulfilling. I think sometimes what I say is like at the end of a hard week, and Lord knows there's infinite hard weeks in company building. Like there are truly moments, even to this day, where you have moments where you're like, why am I doing this? Or is it about to crumble? Right? We all have those vulnerable moments, and it is impossible to put a price tag on the beer that Adam and I share at the end of one of those weeks, where we kind of just like only he can understand what I'm going through and vice versa. Even our partners, even our best friends, even other business owners, there's that gap because for a myriad of reasons. And so the beer that you share at the end of that week pays for its weight in gold and has worked all of those economics. That said, though, I'm very fortunate. He's the most patient, annoyingly kind human I know. And I'm very lucky in the partnership department. And I've had partnerships where, yes, there was that shared beer at the end of the week, but the payoff wasn't all the way there. So I think like a lot of things have to be true in terms of alignment, in terms of core friendship, in terms of like, I've talked about this a lot in partnerships, like the duration of your interests, like if you're both long-sighted or if you're both short-sighted, or if one is like 10 years away from retiring and the other's 30 years away from a lot of things have to be true for a partnership to really work. But in our case, we've been really fortunate there.
Yeah, I think Search is a little myopic about partnership in some ways. Like I always go back to the HBR book, which is obviously a really, really helpful book, and the two professors are incredibly helpful. But that one line always sticks out to me that, if you need emotional support, get a dog, is what they have in there.
Is that right? That's wild.
It's a wild, yeah.
I wonder if they wrote that with some recency bias. Maybe it had been a few years since they'd been in the trenches when they wrote that sentence, because we all know that wouldn't scratch that itch.
Correct.
Well, it's a bit of a lens using kind of the baby boomer approach to life and sustainability of all things, work in life.
Often up,
so
man.
I think exactly. And it's true, right? If you're willing to sprint, put everything aside and be singularly focused, that's probably true, but it also means you're coming to SMB ownership looking for one thing, which is the economic reward. And so from that singular perspective, it might make sense. We've all been in the trenches long enough to know that if we're going to make this sustainable, carrying the 100% of the weight is impossible. And we have different ways to resolve that. Kaustubh's built out his team, for instance, even though he doesn't have a partner.
Right. And as a result, our EBITDA remains as low as it's ever been. So that is
well, I do think you've been really
sustainably
good,
low.
Kaustubh, about like, you've got your advisory board, you have your investors, which I think like the way you treat your investors and the way that you've kind of decided who to let into the cap table was largely to solve for this, I would bet. You have a team that you can lean on for that. If only you had friends, you would fully like round that out, but yet here we are.
Yeah, it's tough out there.
So yeah, I mean, you can build solo, obviously, but there's trade-offs to both. I think that's just the truism of life and company ownership. There's just trade-offs to every decision. There's no right, there's no wrong. It's just trade-offs at every turn.
Yes. So I'm curious, behind Decada, obviously Decada has become yours and Adam's, vehicle of all of your work-related activities. But do you have sort of a distinct personal mission or vision that sort of sits outside of Decada Group?
Well, that's a good question. I mean, sort of. Like, I'm in a peer group myself, and we just went
Hmm.
through a kind of annual goal setting exercise where the exercise was to kind of chart out our mission, our values, kind of multiple pillars of life, and thinking
Hmm.
through. I think Kaustubh, you and I did an exercise like this called the Level 10 Life of like
Yeah.
what does Level 10 look like across all of the areas of your life? And so obviously Decada Group is shaped by mine and Adam's own personal goals. I think they're just so tightly woven now at this point that, yeah, there's differences in that, like Decada's mission doesn't necessarily touch my relationship with Liam, my son, or my hobbies, but a lot of what I care about personally, and what I know Adam cares about personally, is manifest in what we're building in Decada, which is we want to build something long term. It's overused, but long term gains with long term people is a saying that we talk about a lot. I want to work with people I genuinely enjoy. You know, like life is, it's the quickest way to stop having fun at work is to be working with people that you just wouldn't want to hang out with over dinner, right? And so that's an important value to me and Adam. A very important value of ours that we stacked hands on at the beginning was we wouldn't raise outside capital. We don't like having that timer, that pressure externally on what we're building. I truly want to be doing roughly the day-to-day I have today in 30, 40 years from now, and same with Adam. And that can be hard to do when you bring in capital partners. Not impossible, but harder to do. And so I think in terms of personal mission, I'm not sure. I don't feel like I could articulate it that clearly, but I think a lot of it has to do with what we're doing at Decada, which is, you know, building a better Salt Lake, like a Utah that we want to be part of in the future, acquiring great companies that we're proud to own and that we feel like we can be good owners to, hiring exceptional operators and bring them into the cap table where we can, and helping create wealth for them. And ultimately creating this reinvestment vehicle where if we're successful, the cash flow isn't just making owners wealthy, but it's reinvesting into this machine that is perpetually compounding if we do our jobs right. And so, yeah, I mean, it's early days at Decada Group, despite Taylor Cooperative being 9.5 years old, and Decada was formed, I think, in late 2020, early 2021.
Hmm.
So very early days in the sense of like, I wasn't talking this way when we were just running Taylor Cooperative, but I think when we formed Decada, it kind of gave us this platform. It gave us this glimpse into what's possible, and that's really what we're trying to build right now.
That makes sense. Yeah, the part that I'm curious about, you know, where do like small business owners, their small business and their life are so like on top of each other, right? That it's really hard to figure out what is the difference sometimes. Um, and your life is obviously, you know, just exactly like that. Like, I'm curious, I don't know if this question even makes sense, but, you know, like when you talk to your son about Decada, right? Like, how do you describe it to him?
I mean, so very timely question because
Yeah.
this week we're in Chicago. He's with me, which is
Right.
one of the biggest perks of business ownership. Is like I don't think I have a meeting on my calendar this year where I can't bring my son. And if anyone says like he's not welcome, I can't just tell him to fuck off, right?
That
And,
is
and
so
that's
cool.
Yeah.
that's a powerful place to be.
How old is your son?
Um, 13.
That is so
Um,
cool.
yeah, it's a blast. And I think if I would have asked him 2 years ago what he wants to do for a living, or if he wants to be a part of Decada in the future, he would have laughed at me and said, "Absolutely not. Like I don't want to be involved in business." But just this week, we were out visiting a really good friend of mine, Aaron and Caprina, who run a holding company out in rural Illinois. And we went out and spent some time with them, and Liam was with me, and we toured their businesses and got to see what they're doing in their own local community. And obviously,
Mhm.
Liam's with me this week as we're, you know, helping the shop come together for an event tonight. And in the car ride, I'm able to talk about why we're out here, why we're doing this. Had some long conversations about entrepreneurship and the trade-offs that echoed
Mhm.
actually very similar to what we're talking about here today. And whether he chooses to pursue business or not, you know, he's got to walk his own walk. But it is very fulfilling to be able to share some of the lessons that we're learning and the principles that we're forging, and how it relates to student council, for example. We were in the car for 3 hours driving out to visit my friends and talking about how he shows up as the president of student council next year. And his job as a leader isn't necessarily to be the loudest talker, the loudest voice. It's to help bring the voices around him out. And those fun conversations about just life that get largely informed by what we do in our careers. I think that Adam and I sometimes talk about how some of the challenging lessons we've had to learn in Decada don't just make us better business leaders, that they're hopefully working to make us better people, but being better at listening, being better at understanding people with empathy. And it's what we do is challenging in small business. You're working with small teams, you're working with a lot of emotion. One of my favorite things that Brent Beshore has ever said is that all small businesses are messy, and that's because all humans are messy. And you see that up close and personal in what we do. And so, yeah, it's fun to find ways to bring Liam into that. Whether he chooses to go be a YouTuber or a business owner is fully up to him. But hopefully he gets to see a glimpse at, what it's like to have a dad who's super fulfilled, and kind of share some of those lessons along the way as we do it.
So Chase, I would say I don't want to take all the time away from you telling the story from the original Taylor Cooperative to, Decada and that holding company. But at a certain point, I think I want to ask you, what are your personal strengths and maybe weaknesses, and what are Adam's strengths and weaknesses? I'm just going to hit it again because I think it's really useful, like how that partnership works, because it probably really mattered in the first business, but it especially matters now that you have multiple that you're managing together. So maybe just a quick, what are your strengths and weaknesses? What are his, and how did that inform, like, going from one business to two? And then we'll get into Decada for a sec.
Yeah, so it's funny, in 0 to 1 startups, there's a lot of talk around, like, get a technical founder, get a business-minded founder, and make sure that you don't have 2 technical founders or 2 business. And with Adam and I, like, on paper, we're very similar. It's not like he's product and I'm marketing, or on paper we're pretty similar, but as you get to know us, we're actually very, very different people, and that helps a lot. Like, it's dumb, but it's a easy example. I have a natural proclivity to spend, invest, go, let's acquire this company. He's a very cautious and conservative operator. He's frugal. If he picks the hotel when we travel together, like, I'm not having a good time. If I pick the hotel, we're spending 5 times as much. And so, like, we balance each other out in that sense.
That's interesting.
I think that's probably the most powerful and beneficial balance. And again, like, we're looking at a deal right now that we're trying to get under LOI this week. And I was very much the one articulating why we should do this, the opportunity, the upside. And he was very much pumping the brakes in a way that sometimes we can piss each other off. But in the end, it nets out to something that is much more that's much better. That's kind of the hybrid between our approaches. He's a lot more internally focused. He's very scrappy and very willing to just, like, go get the work that needs doing done. I can be a bit of a prima donna on, like, where my time goes and time allocation, which I think is a strength. I think one of my biggest strengths is I'm very intentional with where my time goes. And it's very rare that I'm not focused on my best and highest use areas. And if something is not my best and highest use of time, I'm delegating it, I'm automating it. And Adam is so great at just earning the rapport and trust of our team, because he's like the metaphorical, like, sweeping or, like, cleaning the bathroom. And it's like, I'm way too much of a prima donna or strategic with my time to go clean a bathroom, right? So we're very different in that sense. I prefer acquisitions. He prefers startups. So yeah, hopefully what you're seeing is, while we're very similar in skill set, and, like, he can go into any meeting as my proxy and vice versa, and we'll come away with the same outcome, we're very different in attitude and in approach, and yet share this, like, really important respect and goal of, like, Decada isn't successful if we're not best friends in 50 years, right? And so, like, and that's not true in 0 to 1 startups, by the way. Like, I've had to fire a co-founder with my board before because that was the right business decision. And with Adam and I, again, the goal isn't to go return the highest multiple of capital. It's we're trying to build something that we love and enjoy, that we're passionate about, that's fulfilling, that's enriching. And you can't do that if you're firing each other, fighting each other all the time. And so we're similar, but we're different, and that can be a really useful thing for us.
Like, I get asked a lot by searchers, like, how did private equity prepare me for running a business, and kind of the skill set side of it. what skills did you need to develop as a small business owner and all of that. And it just seems like more the deeper I get into this, it's so much of it is just you got to just figure it out. It's not actually a skill issue, so to speak. It's more of a attitude and kind of urgency and mental approach.
Yeah, I mean, I would argue that's the skill, though. I mean, like, I
Right.
think there's kind of two muscles that you're building
Mhm.
in company building, especially in the small business landscape. And one is like the ability to just get like punched in the face over and over again and still get up, right? Like this
Right.
resiliency of just you develop thick skin. You also develop this internal confidence of, while I've never solved this crisis before, I know I've felt this emotion of a crisis like this before, and I know that the sun still came up the next day, and I knew I'd found a way to get through. And so you build this capacity for pain, or this capacity for like solving crises and problems.
Mhm.
And maybe this is the same thing, because what I was going to say is the second muscle that you're building is this problem solving skill set of knowing when to listen versus knowing when to act, knowing how to, how to go about solving a problem with people. And so it's very much this like endurance piece, but then it's also very much this problem solving piece as well.
Right, and that's what I think is interesting about the partnership with you and Adam, where if the skill sets on paper look similar, because the traditional advice is you need partners that have complementary skill sets, like different things that they're
Yeah.
good at. But
Yeah.
it's really more like having the two of you with slightly different attitudes and styles kind of expands your capacity for problem solving, expands your capacity for getting punched in the face,
It
right?
totally does, because yeah, I think there's
Yeah.
many moments where I want to move quick and he slows me down, or vice versa, and where yeah, really the success of a business long term over multiple decades is, can you do it sustainably? Can you string together more good decisions than bad, and we still make a lot of bad decisions, and having that balance really helps ensure that we're not moving too quickly or too impulsively.
Should we get into the Decada story a bit? I know people would probably throw tomatoes at us if we didn't.
Let's do it.
Let's do
Where do you want to start?
give us the overview of what Dakota currently owns, I guess, and how give a quick summary of how it actually operates, right? Like who runs each company, that type of thing.
Yeah, for sure. So one of the areas where Decada Group has changed the most in the past 5 years, and one of the things we've changed our mind on in maybe the most meaningful way, is we're very lean at Decada Group. It's me and Adam and our chief of staff operating partner, Peter. And we have fully decentralized all of our shared services, all of our involvement inside of our companies over the past few years in terms of day-to-day operations. And we have given that budget and that authority back into the operating company. So each of our companies is led by a CEO, president, or general manager. We use the term operator as an umbrella term for all of that, whose really their mandate is to steward the company on our behalf and in alignment with our long-term vision. And depending on the size of the company and their experience level, they are either acting as a GM, effectuating our budget and our vision, or as a CEO, where they're coming to us for a blessing on their vision and their budget and their plan. And across our company, so we have Taylor Cooperative, the luxury clothier. It's a destination retail, high price point, high margin, high touch experience business. That was the OG. And then we acquired a fine art school, so an art academy in Salt Lake City. Any given month, we're teaching about 200 classes across watercolor, acrylic. We have a thriving ceramics and pottery program, drawing, and we just started a phenomenal new CEO about 4 weeks ago. And his mandate is to go open up 2 or 3 locations over the next couple of years, either through acquisition or de novo. It's actually turned into a beautiful, just great business, community asset, but also financially, it's at its high watermark, it's operating at 30% EBITDA margins. It's cooking with gas. And then we have an electrical contractor, a kind of general trades company, team of electricians. We do break fix residential work, and then we do construction, kind of project-based electrical work. And then we formed a company called Durable about a year ago. And Durable is our kind of solution to the problem of chambers of commerce in Utah not really doing a great job at bringing business owners together and creating networking and camaraderie opportunities, solving for the lonely owner syndrome that we talked about. But also it's kind of a combined offering of like a YPO or a Vistage or an EO. And so Durable is kind of our community building arm. And we have peer groups, and we do a variety of things. Workshops. We launched an offering called the Operator Accelerator, so kind of an education-based program.
And to be clear,
then,
this business is a startup.
Yeah. We launched it 9 months ago. Yep. And then the last company is Durable Finance. It's our fractional CFO and accounting business that we also launched. Instead of kind of taking our shared services and like pulling a pistol out and like killing it, we decided to spin it out as its own entity. And we have Durable Finance, which is honestly, I've never seen a company grow as quickly and as profitably as Durable Finance. We're doing bookkeeping, accounting, fractional controller, fractional CFO services. Its first client was our portfolio, and then we've been just bolting on clients, primarily in Utah, but generally it doesn't have to be geographically focused. And so that's our finance and accounting company. And
I hadn't even heard of that one. I had no idea you were doing that.
Yeah, we are cooking, man. We're on. We started a CEO about 4 weeks ago. So 2 CEOs started in the same week. It was a fun week. And he's phenomenal. 15 years in finance and FP&A. He's our CEO. We brought him into the cap table, and he's building Durable Finance out. So yeah, kind of brand new. We haven't talked a lot about it yet, but yeah, we're moving.
Can I ask you? This is something I've thought about a lot. Is when you put a CEO in a business or a GM, right? Now, if you're stepping into the true kind of governance sort of strategic owner seat, and you have a different person in the execution day-to-day ops seat, is it better at that point for that person's life to be the like 5 to 7 year sprint?
That's a great question.
Yeah.
I think our timeline is slightly different than that of our operators. I think they don't need to get full arrival fallacy mode and, practice a completely different approach to company building than us. Like our economics and the fact that we don't have to squeeze a company and sell it for a return. Like we are permanent capital where we are living. My salary gets paid fully off of distributions out of our companies, and that's it. Right. And we don't need an exit to make me and Adam rich. We don't need an exit to make anyone rich. And there's no one pushing for an exit. And so the permanent capital vehicle is helpful. We do kind of tell our CEOs, though, that first of all, it's kind of up to them and us in terms of a handshake of like, what are we trying to go do over the next 5 to 10 years? And if we have a CEO that says like, I want to come in and be your best damn CEO for 5 to 6 years, I want to buy in at this price, and I want to go grow equity value and make cash along the way, but then also let you buy me out at year 6. I'm game for that if it's the right company and the right CEO. And obviously we don't want to be doing anything short-sighted with our long-term mission. But if they want to come in and just be a phenomenal operator for 6 years, odds are we can work with that. If instead they're like, this business is incredible, I want to spend the next 30 years doing this, we can't run the risk of it turning into a sleepy business where the economy moves too fast, especially with AI and digitalization and globalization. Like we can't just like sit back and chug. So we there has to be a dose of growth mindset and kind of a growth offensive stance. But growth can look like compounding 7% a year. It doesn't need to look like 60% a year. And so I think it depends on the company and it depends on the opportunity. We had one business, for example, I can't talk about which one, but kind of got into a very competitive space really quickly. A lot of competitors opened up suddenly, and this idea of coasting for 20 years suddenly just felt wrong. And the space is also going through a moment where things good tailwinds. And we decided, you know what, we do need to pick up the momentum a little bit. And if we keep coasting, this company will die. And in small business, there's kind of the saying of like, if you're not growing, you're dying, right? And so sometimes like the company, I guess here's how I would say it. The operator and the industry and company need to meet the moment. And if that is a long-term focus where their attitude is much like ours on slow, long-term compounding, amazing. If there's someone tenacious that wants to move at a faster clip, we can support that.
Can I ask a quick question? Because I know we talk about like thinking in terms of years and decades, but are you comfortable sharing capitalization in order to promote that way of thinking? Like how much debt, if any, that you use and maybe how you allocate the cash? Because it's like really easy for us to talk about operating and thinking long term, and then you've got 90% LTV on a deal, and that changes fast.
Totally. Yeah. I mean, I think our openness to starting companies gives us a pretty big advantage here, where we have 3 companies with no debt.
Yeah, good point.
And every
Really good
deal
point.
so from a global standpoint, I can't remember exactly what we published in our annual letter last year, but it was like a 4 or 5 DSCR. So we're not talking like 1.2 or 1.6. We're talking like 4 or 5. And I think it's only gotten
Must be
better since then.
nice.
Yeah, and that doesn't mean like there's no pressure.
That also
and it
means
doesn't mean we're
your
just
startups are profitable. Let's like not ignore the fact that you are cash positive on a startup.
Yeah, I think our last financial period, we closed out at a portfolio EBITDA percent of revenue in the 20s. And again, when like most of that EBITDA isn't going to debt payments, like that means we get to go reinvest it. And to be clear, Adam and I are very long-sighted. Like we're not issuing distributions out of Decada Group right now. The cash is staying in. We're reinvesting. We have a lot of growth internally. We have a lot of things we're looking at externally. But yeah, I think from a capitalization standpoint, we've done 2 where we came up to 90%. Like we're just like anyone else. Like sometimes you got to do what you got to do. But we've done 2 acquisitions with all cash and a little seller note. And then we've done a couple startups with no debt. And so we're nearing the point, every kind of holding company goes through this. We're nearing the point where maybe in the next 2 years, we're going to go bring all debt up to the holdco level where we can negotiate phenomenal terms and then go issue debt into the opco level. But so like we have one company that's probably, frankly, struggling to hit, a good DSCR level. And then we have other companies where they have no debt. And so globally, what we tack to, me and Adam, is are we in a good position from a portfolio risk management standpoint? Globally, how are we looking? And it changes, context specific to the opco.
Yeah, I mean that's the if you can lower cost of capital for all of your businesses because they're cross-owned by the same owner, right? That's actually a structural advantage.
Yeah. I think we need to get a little bit bigger to be able to go get the kind of terms that we want. But yeah, we're kind of nearing that inflection point that I'm really excited about, because then, like, imagine if I can just go take down a deal in all cash in 30 days because of debt facilities or credit facilities I have at the holdco level. Like, we would be an unmatched buyer in the state of Utah. Like, ideally, we're building a story and a reputation and a legacy at Decada Group where no searcher wants to compete against us. If we put an offer on the deal, ideally, the seller knows that we can close, we have the capital, we have the track record, and that we will be good stewards of their brand. But also imagine if I can sweeten it a little further and say we'll close in all cash in 30 days because we know exactly what 30 days needs to look like to get to the closing table. So I think we're 2 years away from being able to do something like that.
That'd be pretty cool.
I was going to say, I can't imagine.
Famous last words. Touching wood over here.
Kaustubh, I was going to go a little off the beaten path. Do you want to talk more about Decada before I kind of turn things around a bit?
Take it away.
I was going to ask you because many searchers or sort of small business owners who maybe skip past the first business part of the thought process want to know, they want to get there for some probably financial reason. Usually it's like, okay, lots of cash flow going to the holdco. You think about capital allocation, you go to the country club, that kind of thing. But I'm guessing that your day in the life, maybe it's more Adam's because it sounds like he might be some responsibility for putting out fire drills. What is a day in the life of yours like?
Yeah.
A typical day in the life. Maybe there is no typical day.
Well, there's typical trends. I think we get pulled in. We joke. It's like we either get pulled in when things are going really good or really bad. And if things are in the middle, what our day-to-day and what our operating cadence looks like is 4 board meetings a year. Peter, our operating partner, he does a weekly rundown with every operator. We go through metrics, make sure they're doing okay, we make sure there's no risks. Then we do 2 summits a year where we bring leadership teams in. Like, we do something fun together, go some more fun together. What else do we do? Board meetings, summits, weekly rundowns, monthly financial closes. I'm not involved in that, but Durable Finance is now running that with each operator, kind of closing out the books together. And really, that's our operating cadence. Like, ideally, all that's happening is we're attending 4 board meetings a year. We're looking at great acquisitions and we're sourcing great CEOs and presidents because inevitably, we're always headhunting for a role. And in an ideal world, we have delegated full autonomy, authority the plan out to our operators, and they're held to account on whatever plan we stack hands on for the upcoming year. So again, that could be a 3% annual growth. It could be a 60% annual growth plan. But whatever that is, we stack hands, we shake hands, and we say, this is the plan for the year. And borrowed from Mark, who used to be a permanent equity, they called this the box. And we say, like, this is the framework, this is the play of field that we expect to stay in, that you expect to stay in. It came from the operator. And as long as we're staying inside that box, you have earned autonomy, and we are excited to give you that autonomy. And call us anytime, and we're here to be your emotional support. We're here to like jump on a whiteboard with you. We're here to process ideas or issues. If someone key resigns, we hope that we're your first call. But in an ideal world, there's 4 board meetings a year and a weekly rundown. That said, things inevitably we get punched in the face sometimes. And sometimes, like, we have a company that's expanding, and I'm out here in Chicago, blowing wind in their sails and trying to help where we can. We're throwing an ETA happy hour tonight, not because ETA folks particularly like wearing custom suits, but because this is one small area where we can be helpful. And, just last night we were here screwing in, screws into a rack, so like trying to be supportive where we can. And then on the flip side, when a company finds themselves in choppy water, which every single one of our companies has before, we are there to get it back on track. And that can look fun. It can look like, hey, how do we solve this problem together? Do you want us around? It can look challenging. A company that we acquired and a couple of years later sold, we had a leadership issue, and I put my desk in his office for 6 months, and I was interim co-CEO, and I was there running L10s with him, and he probably didn't like that. And we were there getting really involved, because ultimately our job at Decada Group is to be the long-term, multi-decade steward. And when you're a steward, you're responsible for protecting the asset. You're responsible to every single person who relies on a paycheck from that company. You're responsible for the customers. And our job is, like, we go hire people that we can delegate stewardship to, and who are excited about that. Where, like, that's their big home run opportunity, is to be the CEO of this company and to swing for the fences. And sometimes, inevitably, we get involved. So yeah, there's no common day to day, because our best company today could be our worst company in 6 months from now, and that will cause us to get involved. And if a company's expanding or has an acquisition opportunity, we're getting involved with that. But our jobs to be done at Decada Group are first and foremost buy great companies, because if we buy bad companies, like, we make everyone's lives harder. And to buy great companies, you have to do a lot upstream in order to get the right to buy great companies. Appoint great leadership. And then third, be a hands-on advisory board, and make sure that they are, like, that we're putting Gatorade in their mouths when they're on break, and we're helping them think through the next play. And at the end of the day, those are our 3 jobs to be done. And everything else is in support of that, or potentially a distraction. And it wasn't always that way. Like, if you would have talked to me 3 years ago, like, we had to be involved, and we had a shared services team in marketing, and we had a shared services team on finance, and we were doing what I think we had to do to get to where we're at today. But today, I think we've got a lot more clarity on, like, what Decada Group is, and importantly, what it isn't.
I feel like that was true even 18 months ago. The advancement over the last 18 months is pretty remarkable.
What sucks about doing interviews with you is you actually know the facts, and you know me, so you can keep me honest. You're like, no, that wasn't 3 years ago. That was last Tuesday. Yeah, maybe it's a little
it makes it
aspirational.
all the more impressive. I mean, you guys have really leveled up kind of into the structure.
And I'm spending a lot of my time helping incubate durable finance, and that's probably 10 hours a week for me right now with Pearson, our CEO. But yeah, I mean, so there's always exceptions, and, like, it's never as glamorous and structured as we all want it to be. And that's just the reality of small businesses. And frankly, you're the right kind of psycho if that's fun and you enjoy it, right?
I mean, the key thing I feel like you said there was you guys are the stewards, and you delegate stewardship to your operators, right? But that doesn't, like, you at the end of the day are still the backstop, even though there's multiple businesses.
Correct.
Still,
we're the only ones who have PG debt. We're the only ones that get mud on our face if it does side. I mean, everyone in the cap table gets mud on their face. But yeah, ultimately we are the chief backstop. And unfortunately, that means sometimes we have to play that intervention role. But usually we don't, I mean, if we do a good job buying great companies and putting in great leaders, like, in theory, it shouldn't happen. But of course, life has a way of making things a little more complicated than our 40-year pro forma would have us believe.
Well, so I have one last question so that we don't go too long here. Sam, do you have anything else you want to dig into first? No, you're good.
Yeah, I think that was a great conversation. I do also want to hear, before you go, just to touch on what we're seeing in your background there in Chicago. But go ahead,
This is true.
Kaustubh.
Yeah. Okay. So the one last question I had is where you're at today with Decada and all of your businesses. Right? Do you feel like it's sustainable? Like you're not going to retire from this? Does it feel like you've sort of arrived at the arrival fallacy point?
Yeah. Well, again, touch wood. I mean, it's it feels very different in a good way than it did even a year ago. And in terms of like cash floating up and ability to reinvest, and in terms of like up into the right movement, yes. I think, there's a lot of deals we can't take down because of that constraint we put on ourselves of like only using our own capital. Um, I think every small business is like a cute little dumpster fire, and that's true of each of our companies. Like we build maturity and we try to help ensure that they're predictable and durable, but I think there's always room to go on that. But I think right now we have the best operator leadership we've ever had in our history. We're comping them better than we ever have, and that's only going to go up. We're getting access to more and more deal flow all the time. We're able to look at larger and larger deals. So yeah, I mean, I think like there's room to optimize everywhere. But I think we are much more on path than we've ever been. Again, touch wood.
Amazing. And then to wrap, tell us where you're at. There's movement in the background. Things are happening.
So it was supposed to be a quiet day in our Chicago location.
No.
And then our president texted me this morning and said, good news, bad news. We have a client coming in for a fitting. And of course, that's mission critical. We're like first week open out here in Chicago. So there's some last minute kind of punch list items to get the shop ready. If I pan around, I think that's Liam, my son, putting Dr. Pepper in the fridge.
That's so cool.
So it's a beautiful location. I mean, if you look out to our little courtyard, I'm not sure how much you can see, but so tonight we're hosting a big kind of outdoor-indoor event, music, food, drinks, and slowly warming this space up out in Chicago. So it's full circle for us for a lot of reasons, but this was the business that we started 9.5 years ago. Just me and Adam, with a hammer and a screwdriver and, naive ambition. To today, the way we built Decada Group was candidly, we really starved Taylor Cooperative of every dollar of free cash flow. Every dollar that could have gone to mine and Adam's boat or back into the business to keep it, to reinvest it and go open more locations, we put on pause. And we said, we're going to sweep every dollar up to this new company we're calling Decada Group. And we're going to go redeploy that cash, that good cash, after at certain times felt like bad cash, going and putting it after acquisition 2 and acquisition 3 and acquisition 4. And so about a year ago, we decided, what, we're ready to start reinvesting back into this beautiful business. And this is truly one of our best companies, high net promoter scores, really loyal, phenomenal team who loves the industry, great margins, negative working capital, like the client gives us cash before we incur any dollar of costs. It's a beautiful little financial machine, and it's a great community asset. And so now we get to go and expand into Chicago, a much larger market, a much bigger bet. And we are officially open for business in the city of Chicago for Taylor Cooperative.
Well, I'm a happy customer. Speaking of negative working capital, you have to send me an invoice for my suit that I wore last week as a groomsman.
Good. It turned out good.
It turned out great.
That's great.
And it was 91 degrees in the sun, and I felt good.
That's awesome. I'd love to hear it.
All right, Sam, anything else?
That's it. Chase, you've got a great story, and I think, hopefully it's really helpful to whoever listens to this crazy podcast. So thanks for coming on while you're out in Chicago, man.
Yeah, hopefully it's a story of just like, if you keep your head down, you build, things never go the exact way that you expect it to, ever. And that's just how life goes. But if you stay focused on kind of the long term and you're just 1% better every day, to use a cliche, if you, like, what's that old saying of like, how do you become great? You just be good consistently. I think like our story is hopefully one where yes, it might feel unattainable of like 6 companies and a holding company, but hopefully what you can hear in my voice is like, we're not the smartest guys in any room. We don't have this brilliant insight. We don't have a rich uncle or a private equity group behind us. It's just a story of like a 9.5 year like story of just one foot in front of the other. So thanks for letting me come and kind of wax poetic a little bit, but it's always fun to see you guys.
Thanks, Chase.